Hi, welcome to my video class. Today we will discuss about the chapter cash flow statement. Now, what is the meaning of the cash flow statement? It is a statement that shows flow of cash and cash equivalents during a given period of time. The inflow and outflow means the cash comes into the business and goes from out of the business. Now, what is the cash and cash equivalent? Cash we know cash in hand and cash at bank, that is cash deposited within the bank. Now, what is a cash equivalent? Cash equivalents are which can be converted into cash within a short period of time. That are the highly liquid investment, short-term investment, and marketable securities, treasury bills, commercial papers are examples of this cash equivalent. In an enterprise, there is various activities which result into cash inflows and outflows, or receipts and payment, which is the subject matter of the cash flow statement. As per the accounting standard 3, the changes resulting in flow of cash and cash equivalents arise on the three type of activities, that are operating activity, investing activity, and financing activity. Now just look at on the preparation of cash flow statement. First we have to find out cash flow from operating activity. The flow may be outflow or inflow. That may be the positive figure and the negative figure. And next we find out investing activity and financing activity. Now total of these three activities, we calculate add the cash and cash equivalent in the beginning of the year, that is the previous year in the problem. In most of the problem, they should be given the 2 years datas, and in the previous year cash and cash equivalent is taken to add with the net increase or decrease in cash equivalent from the three activities. Then we will get cash and cash equivalent at the end of the year, that is the current year. This is a simple cash flow statement. Now we have to find out what are these activities. The cash flow from operating activity means it's a principal revenue generating activity, and these are mainly derived from the main activities of the enterprises. Like if in a company we are sales goods and we are providing services. For sale of goods we are getting cash, that is an inflow, and for the rendering services we are getting fees and commissions. These are the inflow of operating activity. Now what are the outflow in an operating activity? The payment to the suppliers for the goods and activities is a main operating activity cash outflow, and payment towards the employees like salary and wages is also example of the outflow of operating activity. Cash payment to the premiums, insurance premiums, annuities, and other policy benefits are outflow. And cash payment of income tax if it is not identified with the financing activity and investing activity. These are the outflows and inflows in an operating activity. Now just look at on the investing activity. It consider the acquisition and disposal of the long-term investment, and it is not included in the cash equivalent. The investment which is not included in the cash equivalent. Then first look at on the outflows. Outflows means the payment for a purchase of a fixed asset, including the intangible asset like goodwill and patent, like all the other intangible asset included in the fixed asset. Next one is the cash payment to acquire shares and debentures of other enterprises. These also outflows of investing activity when we are purchase the shares of other company and we purchase the debentures from other companies, then it is a termed as outflow from investing activity. And sometimes we are paying loans and advances to the third party, then these are also termed as an outflow. If the purchased fixed asset or machinery will be sold, then we'll get cash, that is the inflow from investing activity. all the fixed asset like building, machinery, land also including this. Also intangible asset also consider in investing in the activities. Cash received from the repayment of advance or loans made to third parties when the third parties repaid the advances loans is also a inflow. And cash received from the disposal of shares and warrant or instrument of other enterprises also inflows. The interest received in cash from the loans and advances is also inflows. Dividend received from the investments it's also inflow from investing activity. Next activity is financing activity. As the name suggests, financing activity related to long-term fund or capital of the enterprises. And for starting a business or for the development of business, we need fund. This may be from the owner's capital or from the borrowings. So, as the name suggests, financing activity means activity that resulting change, size, and composition of the owner's capital and borrowings of the enterprises. So look at the cash inflows from the financing activities. The first one is the proceed from the issuing shares. It may be equity shares or preference share. Or the proceed from issuing long-term borrowings like debentures, loans, bonds, and other short-term borrowings. And the outflows are a repayment of this amount borrowed, maybe the loans from the bank or from the debenture redemption of the debentures also comes under this outflow of a financing activity. Next, interest payment to the debentures for the loans we taken. These are the outflow from the financing activity. Dividend paid to the equity shareholders and preference share capitals also comes under the cash outflows from the financing activity. Next, look at on the objective of a cash flow statement. The first and important objective is to ascertain how much of the cash generated from the various activities, like in operating activity, investing activity, and in financing activity. How much of the cash generated? This is the first objective of the cash flow statement. And it also helps to assess the cause of difference between the actual cash and cash equivalent and related net earnings and income. And it will also helpful in the formation of different policies. The policies may be like dividend policy, fixed asset policy, and capital structure related policies. These can be formulated with the help of a cash flow statement. It also helps the management to in the short-term financial planning, and it also helps to ascertain the liquidity of the enterprises. How much of the cash can be generated? What are the liquidity position of the enterprises can also be ascertained from the cash flow statement. This also helps in the comparative study by ascertaining the different years cash flow statement. We can compare the data in of a different of the same company or from the data from the different company. These are the objective of the cash flow statement. And now I am winding up the first part or the theory part of the chapter cash flow statement. Thank you for watching my class. Please comment, support and subscribe my channel.